Hey guys, how's it going? Corey Smith here, Core FX. Just want to bring you guys another video here. I was just working on my journal, journaling my trades, and going over some analysis of some trades I've made the past couple weeks and months. And I figured it'd be a good idea to, a good time to make this video for you guys. Last video I made, I told you I would be making a video about journaling soon, and figured now's a good time since I was just been using mine and analyzing mine and all. So, getting started here. I just wanted to clarify that making a journal and journaling your results is probably one of the most annoying things you'll do as a trader, but without question, one of the most important things you could do as a trader. Like without even thought, without even thinking twice. You won't find a professional trader that consistently makes profit and consistently gets better that doesn't journal. Just doesn't exist. It's like I said with the having a trading plan thing. Without, it's like a business not taking care of their accounting and knowing their profits and losses, and you know, it just doesn't make any sense. And it's understood why a lot of traders don't, because for a longest time I didn't. I didn't even know how much I was losing, why I was losing, what I was losing. I just knew I was losing, and nothing changed until I started journaling and following a plan. No profits started to come consistently. Break even wasn't broken. All of that until I had a journal, I had a plan, and I stuck by it. And so I'm going to cover journaling today. There's some important things that you want to like have contained in your journal. A lot of people make Excel sheets. I know you can buy them online, even like pre-made for trading Excel sheets, or you can just make one yourself if you're any good at Excel. Um, but one of the best tools there is out there that I'm going to recommend, I have no affiliation with them, this is just something I use and I recommend, is myfxbook.com. It's a website where you can link it up to your broker, your MetaTrader 4 account, um, and basically they keep track of your trades for you, and they show you, like here's one of my accounts that I have up here. As you can see here, it shows you the number of trades. This is through July and August. It shows you the amount of longs won, shorts won. As you can see here, my win percentage was about 58%, a little under 60%, but I made 997 pips. My average win was 78 pips. The loss was 35 pips. So you can see it's 2 to 1. My account's grown a little under 9%. This is again just an example of one of my accounts. This isn't the account I trade for with the company. This is just a side thing. But you can see, keep track of everything. It keeps track of your worst trade, your best trade. My best trade's only 1900 as opposed to the worst 1500 because I take profit half my positions. So really that trade would have been up almost 4,000 instead of that. So that's why that's a little bit off there. But it shows you everything, as you can see here. Your best trade, my best trade is 202 pips. Worst trade is 52 pips over the last 30 trades. It shows you all that stuff right here. This is a great tool to use. Everybody should have it. It eliminates a lot of inputting for a lot of different things. Like you don't necessarily need to document your exact entry and exit and all that stuff down the road once you figured yourself out a little more. I would definitely recommend from the beginning doing that, but once you have like your strategies going and you're profitable and you're established as a trader, you can switch over to MyFXBook and then just start journaling the other stuff that I'll go over. But either way, everybody should have MyFXBook. You should link it to your account and keep track of it, go over it daily, weekly, monthly, yearly. But as far as your personal journal goes, aside from MyFXBook, what everyone should do for a long time until you're an established trader, and if you're watching this video, chances are you're probably not profitable. If you are, good for you, but I'm making these videos more for people that were in my position a couple years ago, and that we're just struggling and trying to make it work and not giving up, most importantly, but just looking for the next step in advancement. And so chances are, if you're watching this, you're in that position, and this is what you need to document. You definitely need your entry price. Definitely need where your stop is and where your target is, call it set in my training. It's going to be stop, entry, target. You're going to need all three of them recorded. You're going to need the time of day and the date. I'll explain why you need all these in the future. You're going to need the price you exited at, the time and the date you exited at as well. Then you're going to want to write down position size, obviously, so you know how big of a position you're entering. You can, if you want, enter the exact dollar value you have at risk and make sure it's in line with the amount of risk you want to put up per trade. Then you want to have your checklist for your trading plan, the exact qualifications each trade needs to have before you enter. You want to have that as well listed in your journal. That's probably the most important point. You want to have it list exactly what you need. With me, I need an uptrend on the 4-hour and daily time frame if I'm going long. I need a new higher high to be set. Examples like that. You want to put every single one of them there. And get in a habit of doing this before you enter the trade. This way you know going into it you followed your plan as well. Journal it before you even enter the trade. When you see the setup setting up, write all of them down. So if there's any that you're about or that aren't there, you're out. You don't even take the trade. Simple enough. So you want your whole setup checklist, the times in and out, the prices in and out, stop loss, take profit, your risk to reward. If you're good enough at Excel and setting these sheets up, you can have it calculate it for you using your stop and your entry and your take profit pricing. You can formulate that to calculate out your risk to reward ratio. Again, you can buy one that's already done like that. Order type you entered with, if you're entering with a stop limit or a market order, you want to have that labeled down definitely. And that's basically it. At this point, I have my little journal here where I write the trades. I'm going to write the reasoning. I'm going to write all the information I just said, as well as put it in my Excel sheet. The written part is mainly for the setup checklist, why the exact criteria, and then I go back, and when I go back and analyze my trades at the end of each trade's close, at the end of each week, at the end of each month, as well as the year, but the year you want to go back and analyze more of your month-to-month performance. But when I go back and analyze my trades, I go to the journal and I go back and look at the setup in retrospect, which obviously everything looks different in retrospect, but still got to do it. And I write down exactly, going back and looking what wasn't right. Like sometimes you'll take a trade and there's going to be some subjective parts of your trading plan, hopefully not, and hopefully very little, but if there is, you're going to go back and see like, oh wow, this didn't make a higher high. I didn't realize it, or it wasn't a mandatory thing on my checklist or whatever, but you'll go back and find what you're doing wrong. You'll go back and see like, oh wow, this wasn't here, so I got stopped out because there was a news event I wasn't aware of that happened, or the stock market opened higher and the Japanese yen weakened, so it stopped me out. Whatever the reasoning is, enter it there. You could have totally messed up on your trading plan. If you're following the steps like I said, you shouldn't, but you could have totally messed up on your trading plan. And you go back, analyze your trades, and you realize, oh wow, I messed it up there. And so the reasoning, we put the time of day, the date, the day of the week, all that into our trade is, let's say you journal 30 trades and you realize Monday's trades you're losing 8 out of 10 of them. You don't want to trade on Mondays, because if you have Tuesday, Wednesday, Thursday's trades, you're winning 6 out of 10, 7 out of 10, 8 out of 10. If you eliminated those 7 or 8 losers on Monday, you've got a 70% win ratio, a 60% win ratio. That is why we journal that way, is so that you can go back and see what you're doing wrong. If you're not continuously analyzing what you're doing, you'll never be able to figure out what you're doing wrong and what you're doing right. I'll also go back to a trade and I'll be like, oh wow, the daily chart, the zone was respected perfectly even on the daily chart. Even though I enter on the 4-hour, the daily was a beautiful retest of the zone. And I'll write that there so I know what I did right in the trades too. So in the future I can use that as another catalyst. Like, oh, maybe if the zone was respected strong on the daily, and then I break it down to the 4-hour and it was respected at my level on the 4-hour, that's a great trade. So that's why you want to put the days and times. And the time of day, if you're taking trades at any time of day and you're journaling them, you'll start realizing, oh, every time I take a trade after 6 p.m., I get stopped out. Okay, so stop taking trades after 6 p.m. Take trades when there was liquidity in the markets. take trades at U.S. Open, at the London Open, at the U.S. London Overlap, things like that. Um, for my situation, for example, I would journal what candlestick reversal patterns to enter, and I started to realize certain ones had a much lower success rate. And that's how the only way I found that out was because I was journaling the candlestick that I was entering, and I realized spinning tops 80% of the time didn't work. Take them out. Only use stronger reversal patterns, not a spinning top, which is pretty much just a consolidation. It's can signal a reversal, but you usually need confirmation. So it's a perfect example of why you want to journal. Get on FX Book. Get a journal that you only write your trades in. Don't write it in something that you're writing your watch list and everything else, and it'll turn into a clusterfuck. And you don't want to be looking at that. You want to take your journal just for journaling trades. That's it. That's it. This is your Bible. And you want to journal exactly what you do, your emotions you felt before you took the trade, if you want. Journal how you were feeling about the trade prior, and you'll start realizing, like, oh wow, the trades that I really felt good about worked more often than the ones that I felt so and so about. All of this is really critical. And then your entry techniques. I personally, since I'm a trend trader, I take half my profits off the table once my initial targets hit, and then I'll trail the second half. There's a ton of different ways you can trail targets. I have a video about it, but you can trail targets with SMAs, you can trail targets with structure, you can trail targets with a trailing stop set with an ATR distance or whatever. There's a million different ways, and a lot of them work just as good as each other, but each time frame's different, each indicator's different, everything's different with trailing stops and with your entry strategies and exit strategy. So journal how you got out of trades, what position you got out. I have to journal, whenever I have a winning trade, I have to journal 2 exits. So I want to journal how many pips I got on the first one and how many pips I got on the second one, and start to notice if there's a trend. If the second one I'm starting to break even or not make a lot of pips off of, then I want to adjust the way I'm doing that. And your entry as well. A little insight into my trading strategy. Right now I trade 4-hour chart with candlestick reversal patterns is one of the many things that I use in my trading system. But my system's been profitable with entering with market orders right after the close of a 4-hour candle. 9 a.m., 1 p.m., 5 p.m., 9 p.m., 5 a.m. Again, 9 p.m., 1 a.m., 5 a.m. It's 951 is when the 4-hour charts close on the New York time. So those are the times that I look for 4-hour candle setups. Usually 9 a.m. because that's when there's the most liquidity. But when I enter those, right now it's been successful entering at market order. So if there's a bullish engulfing candle and everything else in my pattern lines up, I'll enter at the close of that candle. Now, if the bullish engulfing candle is 40 pips and I have to set the stop 70 pips away and the target's 60 pips away or something not that big, I'm not taking the trade. The risk reward has to be there. But I'm taking it at market order. So now I'm journaling, and I've been tracking the results of after I enter that, let's say it's a bullish engulfing candle, how often price will actually retrace. Let's say it was a bullish engulfing candle. I entered at the top of the candle, and let's say, give me 1 second here actually. Alright, sorry about that, I'm back. I just figured it'd be a lot easier if I did this like this. So let's say we have price coming down. We've got a bearish candle here, and then we've got a bullish candle here, right? Let's say that's a bullish candle. What I'm doing now is I'm journaling how often price will retrace down to whether it's 25%, 50%, 75%, 100% of the candle, and then go in my direction, right? So I'm journaling how often this candle I enter on, whether it's an engulfing, or let's say it was a shooting star candle, and I'm going short. We'll see how often price retraces prior to continuing lower. So what I'm doing with that is I am, let's say, 8 out of 10 winning bullish engulfing candle trades. It retraces 50% of the bullish engulfing candle before going to be a winner. If that's a 10, 20 pip candle and it retraced 50% of it every time, that's 5 or 10 pips every single trade that I could be adding to my wins. If I have 10 wins in a month, that's 50 to 100 pips. That's a ton of money. That's why you journal, to not only become profitable and become successful, but once you are a profitable trader, to continue to improve. When the markets change and pullbacks are no longer working this way, or 4-hour chart candlesticks aren't reliable because shooting star patterns aren't reliable anymore, or Fibonacci is not respecting the 50% level anymore, whatever the reason be, journaling will let you realize and catch on to what is going on and why. That candlestick retracement thing that I'm working on right now is a perfect example of why you want to be journaling certain aspects. And as you get used to journaling and as you get used to trading and following your plan, you'll more and more start to get better at this kind of stuff and realize what's important to watch for and what in your strategy is or isn't working, to know what to look for. Right now, my plan's profitable, but it can be more profitable. It always can. So I'm looking at these little tweaks and these little adjustments to try to make them as profitable as possible. And I could continue to adjust the candlesticks that I'm using for my reversals. I can continue to adjust the other confluential factors that I have. I can continue to adjust the support, the resistance, the supply and demand, the trend lines, the Fibonacci's, everything that I use in my plan. I could continue to adjust how and why I use them, or even using them at all. And that's all because of journaling. Just journaling, though, isn't enough, and that's another mistake I made. For a while, I was just journaling, and I would glance at it every once in a while, but I would never really, analyze it. If you're going to journal, you have to go back and study it. Study it more than you study a trade that you're in or that you made. Study those trades in and out. Take screenshots of them. Save them to your computer. Go back and look at before and after screenshots of the trade. Why it did work, why it didn't work. What news events were open while your trade was there that affected you. Do you trade around news events? Do you not trade around news events? Start noticing all the little details, all the fine print. When you're a beginner, when you're a losing trader, when you're a break-even trader, when you're barely a profitable trader, just having a journal will change the game for you. Just making one and just following it and just sticking to it, that'll change it for you. But once you become profitable and once your journaling is like a custom that you do continuously, then you'll start realizing that you'll be making more and more little adjustments that make you more and more money. It's just one of those things that you got to get on board. If you want to take this business seriously and you want to actually go somewhere with this business, you have to take it seriously enough to document your results, document your actions, document your wins, your losses, your reasoning, how you felt about it, how you didn't feel about it, why you took the trade, why you didn't take the trade. What happened while you were in it? How long were you in it for? What did this event do to it? Why didn't it work 8 out of 10 times? Why are you losing 8 out of 10 trades? What do you see consistently happening in those losing trades? What do you see consistently happening in those winning trades? There's just endless things you can do with journaling, and analyzation of your journal is probably one of the other things that separates pros from amateurs even more than anything else. It's having a journal, having a trading plan, but analyzing them all, going back and looking back at it. Every single weekend, when you're not trading, I know I still do it, and I always have. I spend the weekend studying new stuff and reading new books and listening to new things and analyzing this and that, checking the charts for the week ahead. But there's time every single weekend to go back and look at what you did the week before. And if you're not going back and looking at the trades you did before because you're just greedy and hungry and want to continue to look at what's ahead, that's just, you're missing the bus. You're losing. You're missing out, and you're not going to stop losing. You're going to continue to be the 90% of the people that are suckers that are giving their money to the winners. And you don't want to be that guy. You don't want to be that person. And if you're taking the time to watch these videos and to subscribe and follow me, then you give a shit. So if you give a shit, act like you give a shit and start writing shit down. So start your journal, start your trading plan and your journal, and start taking notes of things and start keeping track of what you're doing. I promise you, if you take, there's small steps, they're annoying, and they're time consuming, but they're the biggest difference. You can watch 8,000 videos on Fibonacci. I could teach a 4th grader Fibonacci in 10 minutes. It's the simplest thing in the world. candlestick patterns. I could use flashcards and teach that to a kindergartner. How hard is it to know what a hammer candle looks like? You know, how hard is it to know these candles? It's simple. Technical analysis can be taught to, I don't want to be disrespectful, to anybody. Anybody of any intelligence, any background, anything. Technical analysis can be taught. The discipline and the sacrifice and the hard work and the time put into this is what separates the winners from the losers. You don't have to be a genius to do this shit. Not even close. There's tons of people out there who didn't even go to college, didn't even go to high school, that are genius traders. Some of the best traders ever have barely any education, and it's because they put the time in the right places. They figured themselves out. They figured out how to trade around how they are. They journaled their results. They kept track of what they did wrong, what they did right, and they got better. Athletes, coaches, sports, and games. How do you think any of them get better? How do you think a pro player becomes pro? Is it because when they lost games, football, let's say football for example. Why do you think there's so much film watching in football? It's a strategic game, right? If they just played a game, lost, and just got ready for the next game and didn't look back at their old games or anything and just move forward, you think they'd fix the mistakes they're making? You think they'd start slipping coverage where they were, or start making all these stupid mistakes that they made in the prior game? Or do you think they go back and watch step by step, detail for detail, every play of the prior game so that they know not to do it in the game ahead? Or if they see that this player did usually safety and did awesome when he stepped up and marked as a cover, man-to-man as coverage or as a corner or whatever it is, they caught on to it and realized, oh wow, that could help us better here. You realize your strengths and weaknesses is the biggest thing you need to have work in your advantage, and the only way to do that is by going back and looking at your prior actions. Past history is the best example of future to come. So technical analysis, that's all it is. If you're looking back at prior chart patterns, all a chart pattern is shape that price has made in the past that has a probability that's higher than other things of happening again in the future. So you're using past data to predict future movements. That's what you got to do with yourself. You got to use your past mistakes and good actions to encourage and to transform and adapt and create them into positive actions in the future. It's simple as that. I mean, no, it's not simple. Trading's not simple. Journaling's not simple. Developing a trading plan sure as hell ain't simple. But to get yourself to do these things and to put the time in to do it is very simple. And although they're time consuming and annoying, they're not hard. I say it's not simple because it takes effort and time and dedication. That is what makes it not simple. Not because you need a high IQ to make a trading plan or to journal your results or to figure out what you're doing right and what you're doing wrong. Anybody could do that. Anybody could do that. So start being on top of yourself like that. If you have trouble doing it, or even if not, reach out to me. I'm a coach. I train students. That's what I do. And I can help you develop your trading plan. I can show you my trading plan. I can show you a trading plan outline, what to do, how to build it. I can give you templates of journals. I can help you hook up your FX book, and I can go over your trades with you and see what you're doing wrong, what you're doing right. Everyone needs a coach at some point in their life with something. So reach out to me and let me know. But that's about it for journaling. It's very important, but again, third grader could do it. Just got to take the time, the dedication, and actually get up and do it. Even if it takes you a while, just do it. You know, slowly start doing it over time. Analyze, go back and look at it. Analyze. But thank you guys. I appreciate you taking the time to watch these videos. If you like what you see, leave a comment, like, subscribe. Please follow me on Instagram, core.fx, Snapchat, Facebook, corefxtrading.com is my website if you're interested in learning some trading. Give me a holler. Again, like, subscribe, follow if you guys like this stuff. If not, fuck off. Just kidding. But if you like what you see, subscribe, follow. And thank you guys. Appreciate taking the time to watch this, and have a good one.